we are going to embark a journey about stock markets, and it is very important that you first get rid of your fears, which are the stumbling blocks for taking any steps in the stock markets. Whenever any subject that you are learning or any activity or any endeavor that you carry out in your life, it is very important that you know each and everything about that thing so that there is no fear in you and you start with a very strong journey. So the most important thing why I want to talk about stock market at this place is, and about the fears of stock market, is that it is like really portrayed in a way that it is a gambling. People are not able to make money out of here. People have a lot of wrong questions that are there in their mind. Whenever I have interacted with the people, I found that people ask me a lot of questions about stock market, which goes like, can we double or multiply of money as soon as possible? Stock market is very risky. We end up losing our entire capital. How can we become crore-patis as fast as possible? Now, if you look at all these questions, there is one thing in common. People are entirely focused about money. None of these people are really interested in knowing this subject so that they can really know about stock market and put their knowledge into use, which can help them as a consequence to earn money in the market. Stock market has a very, very wrong name. And in India, if you see that the number of people who are investing into the stock market is less than 2%. And if you compare this data with the people in America or developed economies, you will see that the number of people investing into the market is really huge. Like more than 35 to 40% people are investing into the markets. So there is a long way to go for this Indian economy and for making people aware that this is a place where you really need to invest money to really make a large amount of money in the market. Let me give you some context of why it has got such a wrong name. If you see the history of the stock market, it is more than 200 years old, and in this history it has evolved over a period of time. So when the stock market was very, very new, there were no rules to the stock market. The people just came together, they started trading. The rules were less, people never knew about the companies that they are investing in, because of which there were a lot of people who used to take advantage of these type of loopholes. So what used to happen is the people who really knew about the business and the people who are into the market, they manipulated the markets to gain as much as possible. Because of which there was number of incidences that have took place over a period of years, which have shaken the trust of a lot of investors into the stock market. But as we come closer and closer to the 20th century, a lot of rules got introduced into the stock markets. There were regulatory agencies which came into picture. The rules and regulations of regulatory agencies are really strict and they are really monitoring what is actually happening in the market. And now it has slowly become a place which is very more systematic, very organized, and everything is available in the public domain. So now if the entire things have become so good for all of us, we are still not able to understand what is the power of stock markets. Everybody knows that whatever money that you are earning through the job that you are doing or through the businesses that you are doing, you have a money which is called as the savings of yours. What do you do with your savings? You use that amount of money. You either put that money in fixed deposit or it lies in your savings bank. The amount of interest that you are getting in savings bank is hardly 3 to 4%, and in our FDs it is hardly 7 to 8%. And if you cut the taxes on that, it becomes very low. Now, if that is the context, then your money that is rising is like lying between 3 to 6%. That is the growth at which your money is really growing up. If you take inflation into account, our inflation is also around 5 to 6%. So it is like you have a funnel in which you have wheat in it. The wheat is slowly coming out of the funnel. So the rate at which it is coming out, it is 5 to 6%. If you are not adding more than 5 to 6% wheat on top of this funnel, then your funnel will slowly become empty, and at the end you will end up losing your entire money. So as you have seen that with the help of an example, you understand that if if our savings returns or our FD returns are not more than our inflation, then ultimately we are not making money in the market, and slowly it is eating away our entire money. So point number one that needs to be understood is, if our returns are not greater than our inflation returns, you are not making money. Now let's talk about what actually is a stock market. A stock market is a place wherein people buy shares of a company in exchange of the money that they pay to the companies. And why do companies needs money? Company needs this money so that they can expand their business, they can bring more profits, and in return what the shareholders get is the return of that particular profit, that the shareholding that you have in that particular company. So if that company is really growing big, then the amount of money that you can make has got no limitations. Now if you look about the stock markets in the last 10 years, if you see how the companies have done, some of the companies have given returns more than 10,000% to 55,000%. What that means is, I need to give you a perspective of what that actually means. Let's say you have 1 lakh rupees in your account. If that company has grown by 10,000%, means that it has grown 100 times. When it has grown 100 times, 1 lakh multiplied by 10 is 10 lakh, multiplied by 100 is 1 crore rupees. So in 10 years, you are able to multiply that money from lakh rupees to 1 crore rupees. This is just not possible in any other way which is existing in our society. Similarly, there are companies which have multiplied like 500 times in the last 10 years. So you can see that the amount of power that the stock market has, like it cannot be defined in terms of the word, and this is what attracts people into the markets. Now at this place, it is very important to understand why there are a lot of fear. Firstly, the fear is propagated by the people who really do not have that much amount of knowledge in the stock markets. People do not have much knowledge in the stock markets, and what they do is they run after making their money twice or thrice or 4 times, and they end up giving their money to anybody who is just coming to them and just promising them that they will multiply their money. This is the first problem that the people are having. They really do not have an idea about the markets, and they end up losing their money. So that's why the majority of the population that is existing in our country or all across the world, they end up losing money, and this creates the biggest fear in their mind, because for earning even small amount of money, they are putting huge amount of efforts in their lives. So first thing that we need to tell to all of them is, first you need to learn about this subject. You need to get introduced to the basics of this subject. Then you need to really understand that it is not as easy as it has been portrayed all across televisions and across all digital platforms. It takes efforts, it takes time, and if you are good at it, if you are good at knowing about it, then you will slowly and consistently start earning money in the stock market. So first is, if you want to learn about this subject, you should not have any fears in this subject, because it is just like riding a bicycle. When you ride a bicycle, the first thing that you need to do is you need to balance the bicycle, and there are chances that you may fall when you are learning that bicycle. So you can start with small amount of capital in the stock market to really learn what is actually happening in the markets. Once you are good at balancing the bicycle, then you slowly start riding the bicycle. There is a fear that you may fall, but you start you start slowly cycling the bicycle. Once you start getting expert into it, there comes a time when you start enjoying the ride of the bicycle. In the same way, the first thing that you need to do is you get introduced about the stock markets. Once you know about the stock market, the second thing you need to do is you need to start trading in the market. You need to start investing into the market by the knowledge that you have gained, and you should not be guided by what the people are saying. Get back to the fundamentals. Everything is all about business in this whole world. The very bank that you are investing your money into is also not safe. What they are trying to do is they are taking money from you. They are putting that money in some other businesses. What that business is doing, it is earning them profits. And in this way, they are able to give you 5 to 6% returns in the form of FD. At this stage, I would like to tell all of you that everything in this world is business. Whether it is a bank, whether you are working for somebody, you are doing work, whatever you are doing, even the countries are doing businesses. So the first and the most important thing for all of you, you have to understand what the business is. Can you tell me one simple thing? If the business is not existing, then where are you going to work, and from whom are you going to work? So it is so important that please get introduced about the business part of it. Once you start understanding about the business, believe me, nobody can stop you from earning big in the market. So the very fear that has generated in you will start residing because you will come to know about the subject. Once you come to know about the subject, then there are chances of making money in the market. Don't get guided by people giving you promises of multiplying the money 1,000 times, 10,000 times. It doesn't happen like this. It happens by the knowledge that you're gaining. The more the knowledge that you have, the better will be your decisions. When the decisions are better, then you will start making money. So now, what is our objective? Our objective in the stock market is to understand about business, to pick up businesses which are robust, to pick up business which are going to do well in the future, and you have to select that company. And for doing that, there are only 3 to 4 basic principles. You need to identify good businesses. You need to identify when the prices are low, and you need to keep that businesses over a longer period of time. Once you keep that businesses over a longer period of time, these businesses start giving you returns which you cannot imagine, and that is why investing is called as a business which helps you build wealth. And at this place, I want all of you to take all your fears. Don't get guided by what the people are saying. Just get introduced to this subject. Try to know about businesses, and believe me, you will be the first one to think, yes, you have taken a right decision at this stage. At this point, I am ending it, and we will be talking about something more interesting, fundamental videos, which will be talking about businesses, how to select stocks, and we will go into the depth of businesses. So at this point, I want all of you to click on the subscribe button so that you can get updated with whatever I am posting. And I would like to form a community of all the people who are really going to go to step up into this domain of investing.